Let's go ahead and get started. Sorry about that, guys. We just ran into a little bit of a glitch, and I had to come back in. It happens. Doesn't happen that often, though. So let's go ahead and read the legal disclaimer. We'll get going. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company.
Hey,
so,
Jeff, while you're reading that, it was not displayed on the screen. I don't know if that's...
Oh, yeah. Let's try this. Thank you for doing that and letting me know. Can you see a face?
I can see Mr. Vora live and in a beautiful photograph.
Okay, very good. Let's go ahead and there's that. For those of you that want to read through it, I'm not going to read through it again. I do want to say thanks for coming. I hope you're doing well. I do want to welcome a friend of mine, Vince Vora. Vince has created, he's been a prolific add-on designer. We've been doing business with him. I think it's for about a decade now, maybe a little bit longer than that. But there's a few things about Vince that I'd like to kind of introduce before I let him go. He does a great job in terms of kind of being able to convey things, talk about kind of the reasons that he's trading something. He's a very understandable speaker, and I really respect that about that. He's also a very, very good add-on maker. In fact, let's call him a good systems designer. He's developed 4 systems for MetaStock right now that have been very, very popular. They've been very well received, and they're so good that a lot of the staff here at MetaStock actually uses his system, including Greg and including me. So Vince, it's good to have you today. I'm going to go ahead and leave a little bit more gracefully this time. Let me go ahead and get you the presentation role.
Great, and thank you for having me, by the way. Appreciate it.
Absolutely. Anytime, literally anytime. And I can see your MetaStock.
Excellent.
This is the point of the webinar where I just get out of the way.
Okay. Thanks again. Welcome, everybody. It's great to be back with you. Once again, I do want to talk to you about our victory system. We designed this I think just before the pandemic started. So it's been almost 2 years now. And did it for one very specific reason. We were expecting a little more volatility than what we were used to and wanted something that would respond to the markets a little quicker. And it's worked out very well. It's helped us stay on the right side of the market. That's, one big advantage with this. The other one is how safe it actually is, meaning when there is a sudden shift in the market, it will get you out when it needs to. So we'll go through all of that. I wanted to start by explaining what you're seeing on the screen. But before I do that, I do want to say I want this session to be as interactive as possible. I don't just want to show you a few charts that I've picked. I mean, I've got a number of them that I can show you, but I'd like you to throw out symbols if you can. If there's a stock that you're in right now and you want to see how Victory would have treated that particular stock, or are thinking of getting into a particular market and want to have a look at what Victory is signaling right now. By all means, just type in the symbol or type in whatever question. Jeff will keep an eye on the chat. I'll keep an eye on the chat, and we'll answer them as we go. So what you're seeing here on the chart is the S&P 500, the SPYs, the ETF for the S&P 500. This blue line that you see is just a 20-period simple moving average. All right, it's a 20-period simple moving average based on the close, and I keep that on there as a way to judge momentum. So what we want to see is a slope on that moving average in the direction that we are trading. Okay, so if we're trading long, we want to see that sloping higher. And if we're trading short, we want to see that sloping lower. I'll go into many examples as we go through this. You're also going to see a number of arrows and little circles here, or dots. Now, the arrows obviously are signaling a trade entry. So if you see a green arrow, you should be entering long. If you see a red, you should either be exiting an existing long or entering a short trade. And again, we'll explain that. If you see a yellow bar, that means you should not be in that market at all. There's no long trade, there's no short trade. We're neutral. We're just sitting and waiting for the next entry. The green dots or red dots, what those are telling you is that the same criteria that came together to create that trade signal is coming together again. So the reason why it's plotted as a dot instead of another arrow is because we're already in that trade. Okay, so when we're in a trade, the price bars, now these are open, high, low, close bars, but whether you're using candlesticks or any other type of bar, once we're in a long trade, they'll be colored all green. And if we're in a short trade, they'll be colored all red for the life of that trade, okay? But along the way, if we get another short signal or another long signal, you'll see that dot appear so that if you missed the initial one, you can take advantage of the rest of that trade. Or if you're more aggressive, you can add to your existing position along the way, okay? So basically, this is a trend following system. This identifies trends. And what we're doing with the 20-period moving average here is making sure that we're also trading with momentum. When you're trading with trend and momentum, half the battle's won before you even take the trade, okay? Then we want to look at things such as support and resistance. So where are we taking that trade? For example, if we were looking at this recent one here on the S&P 500, right? This re-entry here, we were pretty much at an all-time high. So when we look to our left from there, all we see is blank space, right? Which means there's nothing in our way, that there is no hurdle to overcome. And that's a great thing, right? Whenever you can take a trade that is near or at an all-time high, or vice versa, take a short that is near or at an all-time low, that is the best case scenario. And then the amount of slope really matters. The higher the degree of the slope, the stronger the momentum behind that trade. So what I want you to focus on as we go through this and flip through different charts is focus on the entries that have that slope on the 20-period moving average. This system, or all these signals that you see on here, the intent is not to take them all. Now, to be clear, if you did, you should still do all right, but the intent is not to take them all. The intent is to take the signals that have momentum behind them, meaning have that slope on the 20 along with it and in the right direction. So in other words, say we take this trade and we're in a long position, then we see a red arrow. Momentum is sloping higher. So that, we treat that as an exit, not a new short entry. Now, sometimes, we may just go from green to an exit flag, right? And then a yellow, and then potentially green or red again. Or sometimes we go straight from green to red. But remember, if the slope is in the wrong direction, then you want to treat that red arrow as just an exit, not a new short position. So to go long, you need a green arrow or a green dot with slope on that 20-period moving average sloping higher, right? And to go short, you need a red arrow or a red dot along with a slope lower on that 20-period moving average. Now, this is based solely on technical analysis. There's only a couple of indicators in this formula. And So for that reason, it will work on anything that you can chart. First of all, it'll work on stocks, on forex, on futures, ETFs, Bitcoin, you know, crypto, whatever market you can chart. It will work just as effectively. At the same time, any exchange, right? I've used this on the New York exchange, in Canada, in India, in Asia. It doesn't matter where, Australia, South America, tested it all over the place. It works exactly the same. It also works on any time frame. So if you are a day trader, you may want to use this with a 1 minute, a 3 minute, a 5 minute, a 15 minute. If you're more of a swing trader like me, you want to use it on a daily time frame. And if you're more of an investor, definitely use weekly or the monthly. We'll look at examples on all time frames. There are also a couple of other key parts to this indicator. One is the expert commentary, which I'll show you near the end. And there's also a scanner that will quickly help you find new setups. Okay, so with that, let's start looking at a few examples. Now, here is the S&P 500, the SPYs. And if I scroll back here, this goes back to February and March of 2020. Remember the start of the pandemic? Now, the reason why I want to show you this here is, like I said earlier, it's not just the entries that we try to time appropriately, but it's the level of safety in this combination of indicators that, you know, as soon as it senses that something is not right here, or that there could be a potential change in trend, it will get you out of that trade. So if you remember, that drop started very quickly and actually, you know, didn't last very long. It was a very swift, strong move lower, right? So, you know, if you got in here and you got out here, yes, that would have definitely been a losing trade, but it would not have been catastrophic. And that's the key here. We never want to take a big loss. We want to take we consistently want to take more winners than losers. And more importantly, we consistently want our winners to be bigger than our losers. With that kind of math, it's almost impossible to fail. So the one thing that I can tell you is that this will get you out very quickly when things are not going your way. Now, what you should know is that, like anything else, we are susceptible to gaps. You never know, right? Now, with an index or an ETF, there are fewer gaps, but in a single particular stock, you know, on an earnings report, for example, or some other kind of news announcement, you could get a gap. So you need to be aware of that. So whenever we get into a trade, what we are trying to do, and this is a topic that comes up in the training sessions that you will have with this indicator, what we try to do is reduce or eliminate our risk as quickly as possible. In other words, if we enter here, as we move higher and we move into the profit zone, we want to not only move up our stop to protect ourselves, but we also want to start scaling out of our position and banking some profit while leaving part of the position to continue running, okay? We can get into a bit more of that as we go through. But if you're just looking for those areas where you get a signal, either an arrow or a dot, right? With slope in that direction, in the direction of the trade, you can consistently see winner after winner, right? It's not perfect. It's not 100%. I'll never say that. But it is highly accurate. So have a look here. We were in this trend higher. That quickly came to an end on this move here, a quick flash crash here last February, right? And then there was immediate follow through. So would I have expected you to take this signal short? The answer is no, I would not. Why? Simple fact. the 20-period moving average was flat at best. It was not pointing lower at that time. So would I wanted you to exit that long trade? Absolutely, but not take a short. So we see the market flush, and then we get a bounce back. Now at this point, we get a re-entry here. So technically, if you had gotten into this trade, you want to stick with it until you get that exit, right? Or, and scale out along the way. But if you did not take that, that's what the re-entries are for, right? The same formula that came together here has come together again on this bar after that retracement. But this time, look at the slope on the 20-period moving average, right? It's not only sloping lower, it's a dramatic slope, okay? So I often get the question, what kind of slope are we looking for? What degree of slope should I look for? Well, just eyeballing it, about a 45-degree angle would be considered significant, very significant. So this kind of slope here is strong. I would consider that a very strong slope, right? I would consider this kind of slope even stronger. And I would consider this degree of slope even stronger, okay? And so you can see that we would have missed this portion of the move, but we definitely would have jumped on board here and took the rest of that move, which is at least 2/3 of that move. Now we move over here, right? We're finally moving back above the 20. It turns to green. So what do? We definitely exit our short. There's no question about that. But do we go long? Well, there really isn't a slope on the 20, is there? So the quick and easy answer is no. Now, there's one other condition where we would look to get in even if there was no slope, and that is some sort of breakout out of a channel. Now, I'm not saying this is a channel. It clearly is not. But what it is a shift from lower pivot highs and lower pivot lows to higher lows, this pivot to this pivot. And now on the break of this high, you definitely have higher highs, right? So this was signaling, just by reading the price action, it was signaling a shift in direction. We also had the formula come together here and a nice, very strong bar. So you could have jumped on that if you were aggressive. If not, not a problem. You wait for a re-entry and you confirm that we have slope in that direction. From that point on, we did start to move higher. Again, you want to scale out as you go. Or, you could choose to wait until you get that exit, but I would highly encourage you to scale out along the way. If you're just starting out with one lot of shares or with one option contract, for example, kind of difficult to scale out with just that one. But if you have multiples, you can do that. This entry here, right? So I should say, would you go short on the red one? No, you would not. Why? Because there was no slope in the direction of the trade, right? It's telling you to go short. We should see a downward slope. We do not, right? So you don't want to get into that. Green arrow, though, now we do have a slight slope higher, don't we? And that trade was very nice. And here's again one of the reasons why you want to scale out. You get a real nice push higher, right? And then you get that one day that really eats up a good portion of that profit. So you don't want to allow the market to do that to you. And the further away price moves from the 20, the likelier you are to see a snapback. Remember that, okay? So overall, as we scroll through this chart, you can see that if you just focused on the ones with, an arrow or dot that had a slope in that direction, right, you would do very well. This one, for example, you would not take. You had a negative slope, so you would avoid that, right? This one was pretty flat, but then over here, you start, once again, to get in. And again, as I scroll through the chart, you can see that the ones with slope seem to work out quite well, okay? All the way through. And now, here we go. We had a sell off into the close today, and it's telling us to exit that long. Okay. Would I go short here yet? No, not yet. But I'm definitely out of the long position. Okay. Let's see. Goldman Sachs. Let's look at a few here. Goldman Sachs. Same thing. At a quick glance, you can see that if you focus on the ones with slope, right? This one, this one, this one. This one's, I won't even call that slope. But here, 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 right? There's certainly more winners, way more winners than you will find losers that way. The other thing, like I had said earlier, if you have a bit of a channel, right? If you have an area of consolidation where price just bounces back and forth between a certain range, right? And technically to call it a channel, you need at least one touch on one end and two on the other, right? So once we got here and bounced from here, this was the technical definition of a channel. So we mark the highs of that channel, we mark the lows, and we wait for a break one way or the other. Now, here's where the break was. Now, we were already technically in a trade, not one we would have taken here, but victory is green, and it's telling us we should go higher. We had a break. Not only that, we also took out this high here, right? And if I'm not mistaken, that was an all-time high. So there's no resistance overhead. So you could choose to enter on that break since we're already in the trade, or you could just wait for the next pullback and wait for a dot to appear, telling you that the same criteria has come together again and it's time for another trade. But again, this was a channel here, right? We actually broke out and had a signal along with that breakout here if I mark those highs, right? Over here. So that was a clean entry. Worked out very well. If you didn't take that, you had a shot here and another very nice trade, etc. Different time frames really don't matter, right? You get weekly, you get a lot of chop. When you don't have slope, you don't want to be in these going backward. It'll just eat you up. So you want to avoid that. That's why you want the slope, right? You only want to take the ones with a slope. And sometimes you'll be sitting for a long time waiting for a trade if you're focusing on one particular symbol, right? The good news is there's all sorts of setups on different symbols. So you won't be waiting long to trade. But the higher the time frame, the bigger the trades. Now, the longer you're in each trade, but the bigger the trade. So Goldman was fairly choppy for many, many months here, finally broke out here and went on a run. What else can we look at here? Let's look at some of the popular ones that have done very well. Target was really on a tear here lately. So this was a nice entry here. We did have slope. This one was a fantastic one. We had even more slope. This is on the monthly time frame. And so this was an enormous move going from about 130 to almost 270 at one point, is now just below 250. That's the monthly. Here's the weekly. Again, very clean setups. Whenever there's slope, right, you don't see many that fail, right? That's the key. You want trend and you want momentum. You want both. You don't want one or the other. You want both. Okay? Here's the daily chart. I mean, very smooth, very clean. These entries, very safe. You know, fantastic. This one would have been a losing trade, no question, if you didn't scale out, which you likely would not have because it really hadn't moved much, right? But after getting these winners, taking a small loss here really is a lot easier to stomach, right? Now, would we be short target yet? No, because we don't have slope. But on any sort of retracement, we'll likely get short there. Okay. Costco was another one that had been really trending strongly here, and really looks good. Now, you look at the move lower, and as long as we had slope lower, we had some really nice trades out of it, right? This one was similar to that pandemic low, right? Where we not only moved above, but we switched from lower lows and lower highs to higher lows and higher highs. But regardless, you may not have taken that one. You would have caught this one, would have caught a small one here. And then here, we had another little channel, right? And sometimes victory signals actually help you spot the channels because you see a number of arrows one after the other like that, right? Because it's just gyrating back and forth, right? And so you have a little channel, you're green, and then you get the breakout, and then it goes on an enormous run. We didn't even get the chance to re-enter here. It's been such a strong run, and it's still there. But of course, again, you want to be scaling out along the way. Okay. Let's see. Are there any symbol requests from online? Yes, I see a few. Neil asked me to look at Peloton and Pfizer. Let's look at Peloton here. And Peloton has been a little choppy lately, but again, if you're focusing on the ones with slope, right? There's a nice one here, very nice one, right? This one, minor slope. I mean, we did have slope. You might have taken that one. Or you would have had to wait up until here. Short-wise, there's definitely slope, that one. That was a real nice short there. Not this one. Would not have taken that one. And then we started to get back long here, and now we're neutral. Again, we're kind of waiting for another setup here now that it's sloping lower, okay? And, this is a newer issue, but yeah, that's why you see all these yellow bars here. We need a certain number of bars to calculate the formula behind victory. So throughout here, we could not have used victory. There weren't enough bars to calculate until now. And then we started to get the signals here. So there's no point to go any higher than that. Let's look at Pfizer. And Pfizer went on a real nice run recently. There it was. Now, can anyone spot what kind of entry this was? Pretty clear, right? All those back and forth arrows. That was a channel, right? A very clear channel. So I should have carried that box over because this is the breakout candle here, right? Which goes above these highs. I can extend it with the trend line there. So that would have been the breakout. We were green. We did have some slope here, and we broke out of that long-winded channel. And I could have even started drawing the channel back here. Now, one thing to know is that if you measure the length of a consolidation from when it started up until that breakout point, right? You just draw a line across it. You should expect a move similar in length to that consolidation phase. And in fact, if you look at Pfizer and the move that came after that breakout, we're pretty much there, right? It's pretty similar in length. So that's pretty cool. But again, looking back, any signal with slope would have worked out, wouldn't it? So that's what we're looking for. There's even a nice setup back in here. Do any of you trade a day trade, right? If you want to look at it on a 1 minute chart, for example, I know a lot of you trade the SPYs on a 1 minute, right? Here we go. Here's the last, half hour of the day today where we had a real nice flush. There were two beautiful setups here. Kind of gave you a heads up earlier. And there you go. It caught a couple of enormous moves right at the end of the day. Those would have paid off huge. You can look at commodities like gold, oil. Let's look at gold here. And I'll start with
Vince.
Yes.
Just when you're ready, I do have a bunch of requests that are coming through YouTube or for symbols.
Excellent. Okay, we'll do that right after this one here.
Okay.
So this is the 1 minute chart on gold. So you can see today it was kind of choppy. There wasn't a whole lot. That other day when it dropped like 30 points or so, that would have been nice to see. But let's look at the daily chart here. Again, what stands out? All the signals with slope in that direction here, 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 right? Any of these, right? Back in here, right? That's what you want. Now, generally, when I see it, price action like this, where the candles are, you know, all over the place, they're different sizes, I tend to stay away from price action like this. It's a little too choppy. Choppiness equals risk for me. So I try to stay away from it. I like smoother price action. But regardless, even throughout the choppy mess, if you look at the signals that had slope, you still would have done well. We may just be setting up again here soon, but you can look at a weekly time frame. There's a nice one there, real nice one there. You know, monthly. Again, it really doesn't matter what time frame. Look at that move there, this move here. All throughout here, you would have been long gold. Look at that, enormous, right? And then in here, it's a channel. It's a little consolidation break, right? You've gotten long on this one here and rode it, and you'd still be long. Great. Okay, Jeff, which symbols did you want to look at?
Let's start with Arnab. Arnab wanted to look at CRSP.
CRSP, sure. CRISPR Therapeutics. Yep, absolutely. And again, this goes through lengthy periods of consolidation. Now, again, as I mentioned, look, if you measure the consolidation, right, and then you measure the move that follows, it's usually similar in size. So a lot of people find consolidation areas very frustrating. To me, they're pretty exciting. And the longer they go on, the more excited you should be because of the move coming out of it. It should be similar in length. So on the break of those highs, of that consolidation high, you could have gotten in and rolled that higher. If not, you could have just waited for a signal with slope. Now, it quickly came to an end here. You can see that move lower. Then it kind of consolidated, moving towards that 20, giving that 20 chance to slope lower, and there was the entry short, which caught all that move. That was an enormous trade there. And then there was another nice one here. All the others you want to avoid. And it's very simple because they don't have slope. I mean, you would have taken a short in here. That worked out fine. But aside from that, not much, right? What else we got?
Kimberly would like to look at XAU equals, which would be the XAU US dollar pair.
Yeah, for gold. Okay.
I'm sorry, gold. Gold.
Yeah, similar to the gold futures chart that I showed earlier. But again, you know, focus on the ones with slope. It's really quite simple. And when you see the scanner that comes with this, the beautiful part of the scanner is that there is a column that for the slope. So that when you get the list of results from that scan, it'll tell you whether there is a high degree of slope on the 20-period moving average or not. It took us a while to come up with that calculation, but we finally accomplished it. So yeah, and again, we can go back in time and look to see how it would have worked in the past, but it's the same. When there is no trend, okay, that 20-period moving average is going to more than likely be flat, and you do not want to take those signals. Now, if you consolidate for a lengthy period and you break out of that consolidation, you want to trade in the direction of that breakout as long as you know the signals are in line with it, or you just wait for that next signal with slope. Okay, and avoid all the other ones. It is that simple. Any other symbols?
Oh yeah, I got symbols. Let's look at this is the Nifty .NSEI.
.NSEI. Sure, the Nifty 50. Love it. There we go. Very clean chart. Love these. You know, you see a strong trend, and you gotta love it. So you would have caught this one here. It was already sloping lower, enormous trade. Coming out of, this is again the pandemic, coming out of those lows, look at these signals with slope. Boom, 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 all the way through. You get an enormous one here, a beautiful one there, all the way through. You know, do you have to sit on your hands for a few months at a time here while it's consolidating sideways? Sure. Just keep it on the watch list and wait. But it's worth that, because if you had tried to get in and out during this time, look what would have happened. You would have went long, short, long, short, long, short. It would have just eaten you up. Commissions as well as small loss, small loss, small loss, small loss, right? But that's the key here. Have you seen any major losses here? You know, obviously on a big gap, if you sit through earnings, right, and there's a big gap against you, of course, that can hurt you. I try not to sit through earnings. I'm always aware of when that earnings date is and try to get out of that position ahead of earnings, because you never know what's going to happen like that. But aside from an unexpected gap, the system will get you out quickly when it's no longer going in your direction. So even if there is a small loss like this one here, see this one? A very valid entry that we had a very significant slope. You should have taken that trade, but it would have quickly turned around on you and stopped you out. So you would have taken a loss on that one, but not a big one. It would have been a very reasonable loss. And compared to the gains that you would have been taking all the way through, this is laughable, right? This is very, very tolerable. What else do we have?
Okay. Zaid would like to look at BABA.
BABA. So, yeah, been under pressure lately, that's for sure. Let's have a look at how Victory would have done here. So let me open this up a little so you can maybe see a little clearer. We'll start back here. So on the way up, right? On the way up, there was clearly some real nice signals, right? Then it started to come under some pressure here. This was a nice short. Then we started to go higher again. Let's move this forward a little, right? And we were able to pick up some decent trades along the way. And now recently, you know, it started to come under pressure here. There we go. So again, if you focus on the ones with slope or breaking through lows, right? These ones here were suspect, but I probably would not have taken those. So we'll discount them. Even throughout that move lower, there's still an opportunity here to take a quick scalp higher, right? But then recently here is where the real fun starts. So along the way, when you see a sharp move like that, right? We would not have taken this one because slope was not there. But then here it just kind of starts to consolidate. So you can almost, you can mark those lows, right? You can mark those lows. And when you see a break through those lows, right? And you know, the system's telling you we're already in a short or should be short, then that's a trade to take. Or again, be patient and wait for one with slope. Look at the one with slope. Look how beautifully that's worked out, right? So is it worth the wait? Absolutely it is. Absolutely it is.
Yeah, but one more out
Sure.
of YouTube. And then there's a couple that are in the GoToWebinar too. So this one's actually from Greg. He wants to look at peak.k, which came up on a scan for him back in July. And he just wants you to kind of go through exactly where you would have exited this particular trade, if you don't mind.
On the most recent setup here? Sure. Great example. So I'm assuming you took this reentry here, which I don't blame you for. That was very valid. We had a nice solid trend. We had higher lows and higher highs. And we had slope on the 20. It just didn't work out. Now, here's the thing. Here's one more rule that we teach in the training classes that go through this that you may want to follow. if you look at where the dot is, it's on this bar here, which is August 4th, right? So normally we ask you to wait for the bar to close, right? Which means you would actually be going in on August 5th. But you would only want to go in if the high of the August 4th bar gets taken out, which it did not. So personally for me, I would never have been in that trade for that one reason, okay? Now, these signals are very accurate. So another way to trade this, which is a little more aggressive, is on the day of the signal. So on the 4th here, near market close. I would wait till market close, close to market close, because if this had turned around and traded lower into the close, that signal may have disappeared, okay? They only disappear while the bar is live. Once that bar closes, whether it's a daily, a 5-minute, a monthly, whatever, once it closes, that signal is there for life, okay? It doesn't repaint. But say 3:45 Eastern, which is 15 minutes to the close, if it was still showing, you could jump on. That way, if there's a nice big pop tomorrow morning, you know, that's in your favor, right? So if you got in on the 4th here and didn't wait for that high to be taken out, you should have gotten out here on the 9th, or at least the morning of the 10th, once it broke the low of that 9th, right at the open. So
the problem, Vince, that I had, and what you just answered earlier in the presentation. First of all, thank you about the information about the entry, because I didn't realize that either. But I thought you were not supposed to exit a long trade, if the slope was still positive. But you clarified that earlier in the presentation. You said that's not an entry for a short, but it is an exit. And I didn't catch that in your last presentation. So that's where I messed up on this trade.
Yes, absolutely. You want to. And sometimes it'll happen with a dramatic slope where, for example, on a retracement like this, it may go red for one bar, and then you'll immediately get another green arrow to get back in, right? That may happen. But I would suggest you exit and then immediately re-enter if the slope is there, right? Yes, it'll cost you some commission, but these days commission is irrelevant in my opinion.
Commission? So, what's that?
Yeah, exactly. So, but yeah. Now, there will be situations like this where it would have taken out the high, it would have been a valid trade, and immediately turned around. You know, especially when there's a strong trend. So on something like a target, for example, that was really moving strongly here, okay, and had entry after entry. At some point, this trend has to come to an end. So, you know, one of these trades is gonna stop you out. It's the cost of doing business. That's what I call it. So it's not that you did anything wrong there. What you could have done was, yeah, you definitely need to exit when you see a red arrow, absolutely. And you could have taken that one extra step to be a little more conservative, like I am, and wait for the high of the setup bar to be taken out before you get in, right? And it works the same on a short trade, right? If there's a valid short entry, you want to wait for that bar to be taken out. But you see how this one here, this little red dot, we did have a slope lower, right? Here. And this happened on March 17th. And the next day, on March 18th, we did take out the low of March 17th. So that was a valid entry. We should have gotten short there. But what happened? You know, on the 19th, it completely turned around and would have stopped us out, right? It happens. The key here is that it would be a small loss, not a big loss, okay? But you have to follow the rules, because, you know, it's easy to say, hey, you know, I bought a put option here. It's down only 30, 40 cents, whatever. I have 3 months to expiry. You know, I have some time. Maybe it'll turn around and come right back down. Don't play the hope game. Just listen to the signals and react immediately. Okay? I hope that answers your question, Greg. If not, let me know.
All right. And then going to another question from YouTube.
Sure.
Joseph wants to know, what's the big difference between victory and veracity?
The difference is, number one, there are, believe it or not, fewer indicators involved in the formula. So it's a simpler application, but it is the reason why I switched to victory is that it responds a little quicker to shifts in trend, right? I was expecting more volatility, and now I'm expecting even more. So I wanted something a little more responsive. Now, for those of you who have used Veracity or may be using Veracity right now, it's still a very effective system. It works and it continues to work well. If it's working for you, you don't need to change. You can keep using Veracity. But this, to me, Veracity with the formula, you do get gaps, right? Meaning there may not have been any trade here. We may have had yellow bars here for a while, and then you catch a trade, and then we're out of the market for a while, and then you catch another one. This is also painting a picture for you of what the reality is right now at any given point, okay? It's going to be either green or red. You may get the odd yellow bar. There were two here, there was one here, but it's rare. Generally, you're getting a good grasp of, which side of the market you want to be on here, right? So that's the main difference.
All right, that is the end of the YouTube questions for now.
Okay,
sure
there are a couple
more.
More symbols that I'll quickly go through from the webinar. Go to webinar chat, and then I want to get to the expert commentary in the scanner. So here's HPQ. Who was Danielle, I think, or Daniel for HPQ. Again, it's pretty clear when you just stand back and look at the chart and say, do these entries have slope in the direction of the trade? If they do, take them. If they don't, don't. So these ones here, you're saying no, you're saying no, you're saying no, you're saying no, right? Because it's flat. So what does that tell you? There's a consolidation going on. So one simple thing you can do is mark the highs of that consolidation and wait for a break. At this point, you can reconfirm. Do we have slope? That's an added piece of evidence that maybe I want to take this, right? Is it green? Yes. Okay. And then, decide if you want to jump on or wait for the next entry. But the easy ones are just waiting and asking yourself that question. Is there slope, right? Is there slope? Is there slope? Is there slope? And if the answer is yes, you just take those over and over again. Okay. And I highly encourage you, especially in this kind of environment, to scale out, quickly if you can. Meaning, let's say you bought 5 contracts of a call option here on this one, right? And you spent $2 per contract, let's say, and within a week you quickly get a nice move in your favor. You may want to sell 3 contracts or so, right? Or 2 or 3. Bank some profits and move up your stop, and then let the others ride, right? Try to recoup some of that cost, if not all of it, as quick as possible, and go to a 0 risk, and then let the rest ride. During a time where everything seems to be moving nicely together in one direction, that's when you want to really ride it out and not scale out as quickly, right? But these days, when I run the scan, and tonight will be an exception because it was a strong sell-off at the end of the day. But recently, when I've been running the scan, every day you hear in the media, the Dow, the S&P have been making higher highs, record highs, record highs, record highs. Yet when I run the scan, I'm coming up with more short candidates than I am long. That's telling you that internally, there is not a strong trend in one direction or the other, right? An index chart, like the Dow, for example, those 30 stocks may be telling you one story, but the other 3,000 stocks in the market may be doing something else. So the scan is a good example. Another one here, just before we get to the scanner, is Moderna. Moderna has gone on quite the run here, and we had beautiful signals here. right? And now we're out. So you want to ride those, right? But the further away you get from that moving average, the quicker you can expect a snapback, right? So when it pulls far away, and one rule of thumb you can use is look back to the previous times when it moved away, right? How much of a gap was there between the moving average and the price before it pulled back? So, you look at this here and you say, okay, there's that much space. Here is very similar, and it snapped back again. Here, very similar, and it snapped back again, right? Similar. Now here, when we were up here near 500, look how far away we were, right? Sure, we were at all-time highs. It could continue, right? You definitely have to scale out at least part of your position there. Because the faster and the stronger it rises, the less support it leaves behind, right? So the snapback will be very quick because there isn't much support. And again, with support resistance, we'll talk about it in the training classes. Now, let's look at the expert commentary. And I should have told you how to get there. Just go to the top left, click View here, and click Expert Commentary. That'll bring up a box here that'll tell you a bit about myself and a bit about Victory. And more importantly, it puts this little triangle here on the most recent candle. It always defaults there. Now, if there is no trade, like here we have a yellow bar, there's no trade, you are going to see a blank space in between these paragraphs. There's no green or red text, and there's nothing but a description of what this is. Now, you can move that little green triangle above any bar, either by clicking on it, right? Or by using the arrows up here at the top left of the expert commentary box, okay? So if we go down here, let's see. Oh, there we go. Maybe it's just the color of the text that isn't showing up. You can see here it says the Victory system is currently in a long position, right? Now, in addition to that, it's going to suggest a level where you may want to exit. So this is sort of trailing a stop loss for you at the same time. So I have a black background, so it may be hard to see where the little triangle is there. When I hover over it, you'll see it, right? It's there. And if I move it here, there we go, right? We're in a long, and there's that stop loss level, 166.16. Now, if I toggle forward, move one candle higher, right? The stop now is 167.78, right? I move higher, and there it goes, 170.06. So it's trailing it for you. The reason why we did this is if you have a full-time job, for example, and you can only look at this or enter your orders after market close, like in the evenings, you can at least set your stop at this particular level, okay? So that if you're not there during the day and the market turns against you, you'll have an exit, right? So this will walk you through it. And if you ever get to, I'm now hovered over this red arrow, it'll tell you that it's indicating the end of a long opportunity, right? And signaling a short sell opportunity. Now, you have to be the judge of the slope, okay? So do you go short there? No, you don't, but you'll get that heads up here. So this basically holds your hand throughout the life of the trade, which is beautiful. And then if you go to the top left here and you go to the letter P for the power console, open that, go 3 tabs down to the Explore tab here. This top box in the left has all the indicators that you can scan. You're going to have to scroll to the bottom because they're in alphabetical order. And here are all of mine, the Vora scans. And you want to run, these are my favorites. There's a recent change that Jeff and his team put in here, which are filtered. And I'll explain that in a second. But you can scan for the Victory the Vora victory or the Vora victory re-enter. What that means is the Vora victory means anything with an arrow, okay? So a new trade in a new direction. As where the re-entry are the dots, meaning we're already in a trade and it's giving us a new re-entry. So you can scan for one or the other, or both, okay? And the filtered means they're the ones with slope, okay? So it'll save you an additional step. Now, you come down here and you select your market, what you want to scan. So, you know, there's Asia, Europe, North America, whatever you want to. And within North America here, or I should say, we can look at the index constituents here. So we can pick, for example, the Dow Jones 30, right? And say the NASDAQ 100. So we'll do that. So when you do that, if you scroll to the top, you can see how many instruments we selected. So we selected 132 out of, you know, almost 300,000. You go to the right here and you select your time frame. Are you looking for daily signals? Are you looking for 5-minute, weekly? You make your choice, and then you confirm that you have the right ones that you're looking for, that you're scanning for, and you click start. When you do that, this box pops up, and you'll quickly start to see the scan go. And it really is a matter of seconds or minutes if you've selected thousands of instruments to go through. But here we are. We're pretty much done here, right? So it has already successfully scanned through the first group and now the second. Now, unfortunately, we didn't find anything on just 126 stocks. Let me do a bit of a broader scan here. Let me add the S&P 500 quickly, and we'll just start that. We'll stop it part way once we know we have a few that have come through. So it'll quickly scan through them and look for signals here. It's kind of odd that it isn't finding anything here. I hope I didn't do anything incorrectly here. And then once I show you this, I'll hand it back to Jeff, and he'll tell you how you can grab yourself a copy of this. Yeah, I'm finding it very odd that it's rejecting every single one here. I'm not quite sure why that is happening here. Figures that during a live scan this would happen. That's odd. Anyway, what I really wanted to show you here, and I needed a result to show you, is that there's going to be different columns that show up once you get the list of symbols here. And we may have found something here. Let's see. There we go. So you have a long column, a short column, the slope, which is the degree of slope on the 20-period moving average, okay? And the close in the symbol. So you can sort by, you know, price by clicking on the close tab, or in alphabetical order. Here, if you want, you can sort by long signals versus short. The long signals are identified by the number 1. So for example, these ones here, like Trimble, has a number 1 in the long column. So it is a long. Anyone with a 0 is not. But you notice that it has a 1 on the short side. So if I click on the long tab, these are my longs here. Then I click on the short, and these are my shorts here. Now the slope column is what I want you to concentrate on. Since we ran the filtered ones, okay, there's the Vora victory and Vora victory reentry with no filter, or the ones with a filter. The ones with no filter will take any degree of slope, which means you'll come up with the flat ones. The filtered ones will only give you a slope of 5 or higher. So it's either going to be a positive number of 5 or higher or a negative number of 5 or higher. Okay? So it doesn't, it's not 5 degrees, right? So if you see 12, it's not 12-degree angle, but anything of 5 or higher means you have a degree of slope on that moving average. And the higher the number, the better. Okay? So, for example, if we go to Trimble, it's a positive 10. If we open that chart, you know, there it is. So you have a slope and you have a reentry dot, right? If you have a negative slope, like on Humana here, negative 12, you're looking for a slope lower. And there we are with a red reentry here. Okay, and it's that simple. Very quick, very easy, and you'll find numerous setups every night. I normally search everything that's optionable, which is about 4,300 symbols, and the filter helps me focus on the ones with a high degree of slope, which is the ones that matter. Okay. So again, I'll stick around for questions, but I'd like to pass it back to Jeff so he can tell you exactly how you can grab a copy.
Trying to find the microphone. One last question before we get going here. We had a question earlier about whether this would work with currency pairs and commodities. I know we looked at gold, but do you have anything specifically to say about currencies and commodities?
It works the same way, really. So I'll look at CAD here, which is the USD CAD pair, the Canadian dollar versus the US dollar. You know, obviously some forex pairs are gonna be smoother than others. Some are much more active, have much more volume, so you can actually trade them on lower time frames compared to the daily and so on. But the technique or the strategy remains the same across the board, right? You only want to look for the signals that have slope, and it works the same way. So there's a nice short here. Here you would have only taken that short if and when it broke the series of lows there. So it broke into new low territory here, and at that point there was slope. When we initially got the signal, there was not. It was still consolidating sideways. And then, of course, these were a no-brainer here as well. But it really doesn't matter. And you can look at, for example, an ETF for a currency. Like, for example, FXA is the ETF for the Australian dollar, right? Or you can look at, and there you go, some real nice signals there. Or you can look at, you know, the Australian dollar versus the US dollar, which I think is a US equals or no? Is it? Nope. I forget the symbol for that. Actually, Hans had asked.
I'm sorry, I'm sitting here without the microphone on. I think it's AUD equals.
Oh yes, AUD, of course. My mistake.
I said that about 15 to 20 times before I figured out my microphone wasn't on.
Yeah, and again, the same thing. It doesn't matter whether you're looking at futures, forex, stocks. It doesn't matter. You look for the exact same thing across the board. It works the same way. We haven't looked at crypto. Let's look at Bitcoin, for example, right? Bitcoin versus the US dollar. Same thing. So you want to take this one, you want to take this one, right? The ones with slope. Look at the one recently, right? Ethereum. How many of you trade Ethereum, right? It's the same thing. Beautiful signals. All three here, look at that run, right? Here, it was flat. I wouldn't take it. Once it breaks a high, right? Once it breaks a high there, and there's slope, and it's green, then you're welcome to take it, right? But really simple ones to take are just the ones with slope. That's all it takes.
Here's a question that Rajendran had, and I'm interested to hear your answer, Vince. But he wants to know if there's a reason you choose +5 or -5 for slope. Was there a reason that we picked that as a specific number?
Yes, anything below 5 will look more like this. You'll have a hard time distinguishing between a flat or a sloping moving average, right? The slope will be so slight that it's going to be really hard to tell. So I want to trade the signals that have the highest probability of success, and the higher the degree of slope on that moving average, the more likely I will be successful on that trade. So it is not uncommon, I will tell you, it is not uncommon to find a slope of, say, 46 or 27 or 18 on any given night. When you look for these, those slopes exist, right? Like this one would be a pretty significant slope. And those are the ones I focus on the most.
Okay, perfect. I will take over. We're getting a lot of questions about the cost, so I'm going to kind of tell everybody.
Just one thing, because Hans has asked more than once. He's asking for a look at XAO.
Okay, yeah.
All ordinaries, but can you tell me? I must have the same format wrong.
Try .xao. I bet that's what it is.
Dot .xao. It says airlines.
Australian all ordinaries. Let me see if I can find it real quick over here. If you have a symbol, Hans, that would help. Okay. Name.
Let's see. No. That's on XAO symbol. No. Let's see.
I'm sure we have it in here. I'm not sure we can find it in a time that's. Let's see.
I'm sure it's there as well.
I have a better idea, because I do think it's going to be something we're a little stuck on. Hans, if you will email us or get in touch with us, you can email me at jeffrey.gibby@metastock.com, or you can get in touch with us at metastock.com/salespchat. We'll be happy to send you a chart. We're not able to find it. I have lists of maybe like 100 or 200 indexes that I've tried to find it from in Australia, and I'm just not finding it in a timely manner. So just get in touch with us, Hans. We'll be happy to send you a chart for it.
Great. Thank you, Jeff.
Of course. And sorry we weren't able to locate it on the fly for you, but we will. And for anybody else, if we missed a symbol request or something like that, if you do have charts that you want to see, by all means, just get in touch with us. We'll be happy to pull any chart you want to see. So, Vince, I want to say thanks for coming in. That was great. I have to say, every time you come in, I actually learn a little bit more, like the entry rule. Waiting for it to penetrate the high. You've said that every time we talk, and I guess I'm a slow learner.
That was the big takeaway for me too, is that entry rule. I hadn't caught that earlier. I think that'll help me a lot. By the way, I should mention, I really enjoy your system. A lot of the guys here are using it right now.
That's great to hear. I appreciate it. Just going back to the entry, it just confirms that the move in that direction is actually happening, right? So sometimes you'll miss it. For example, this may set up in the next morning. It'll gap up. If it gaps up, I won't take it. I'll skip it completely, right? So every once in a while, you'll miss a move like that, but it's well worth it, because many of the ones that turn around quickly on you will never follow through on that high. So try that. It should help you.
All right. Thank you, Vince. As always, really appreciate it. All right. And so, one of the questions that we are getting quite a bit of is, how do I get this? And I appreciate the interest in it. It's been a very popular product. I really like doing these with Vince, because a lot of the stocks he shows are ones that I've found in scans of my own. And it's a great little method. And I'd encourage you to give it a try. As Vince had kind of talked about before, it does include the detailed commentary, the alerts, the full market scanning for triggers. We added the re-entry filtered scan. That was actually something I wanted to add because I wanted to be able to just focus on the ones that had the +5 or the -5. I'm like, hey Vince, let's add this to the program, and he was totally. I think it's something he's using now as well. So I love it when I come up with a good idea. It happens at least once a year. It does have system testing and the ability to do system testing. And as you can see, it's a very simple product. It gives you exactly the entry price you should be using, the buy setup, a stop loss. It updates every day. And with the slope value, it helps you trade in combination with the trend. Normally, the victory method, the Vince Vora's victory method, is a one-time cost. It's a cost of $1,997. Here at the event, the webinar we're doing as a special, we're going to offer that at a discount of more than 50%. We're going to give you a $995 price. So we also are going to back it with a 30-day money-back guarantee. So you can take a look at it. If it's helpful for you, the idea is, it doesn't take a lot of really good trades to have it pay for itself. And if it doesn't pay for itself, it's not worth having. So we will back it with our 30-day money-back guarantee at $995. With that, we're going to include the MetaStock, a trial to MetaStock if you need it. MetaStock, if you don't use MetaStock, well, you should try it. It's been rated #1 by the readers of Stocks and Commodities for more than 27 years in a row. It's also a great program. Helps you do scanning. It's the engine that kind of powers everything around the victory method. So, and we've been in the business since like the 80s. We have a great support staff. It's a very, very highly rated program, and I wouldn't trade without it. So we're going to give you a trial to MetaStock real time if you need it. If you already have MetaStock, you can just get the add-on. With that, as soon as you place your order, you're going to have access to 2 bootcamp classes. These are classes that we put together with Vince. One of them is like about an hour and a half, and the other I think is an hour and 18 minutes. And even though he covers the same things in both of them, he talks about kind of different things too, as we kind of go through questions and we're kind of doing them. So I'd encourage you to watch them both. There is some overlap and some very similar things. I also think that's good because I think repetition is good for learning. But both of those are actually included. And I did mention that it does have a money-back guarantee. So if you don't like it, you can just give us a call. We'll basically, we'll see if there's something we can help you with if you're not doing it right. But we'll give you a refund if you don't like it. So to do that, you can give us a call at 800-882-3040. You can visit us online at metastock.com/saleschat. I do want to say over the years, Vince Vora is somebody that we've been working with very, very consistently over the years. So I said I'm a little bit duplicitous in my language right now, but he's somebody that we've been working with for a number of years. He's actually been a fairly prolific add-on designer. We had a question earlier about the differences between the victory method and the veracity. And all in all, over the years, we've created 4 different setups or 4 different methodologies with Vince Vora, and all of them are great. We have our favorite trade setups, the veracity, the winning momentum strategy, and then finally the Vora victory method. And one other thing, since these have been such popular products that have been so well received, I had an idea that we should put together a compilation, and I even named that the Vince Vora Signature Collection, which I actually really like that name, where it's a collection of just all 4 of his methodologies. And you can see the pricing of them here. The winning momentum's $4.99. The favorite trade setups is $4.99. Veracity and victory are both $19.97. The total for that would be like over $5,000 if you wanted to buy all of them. What we decided to do as part of the collection, you can own Vince Vora's Signature Collection for just $19.95. So for $1,995, you can learn all 4 of them: victory, veracity, our favorite trade setup, and the winning momentum strategies. We will still back that, even though it's such a huge discount, with our money back guarantee, so you do get a chance to try it. I only want you to keep if it's helpful for you. It's been incredibly helpful for me, along with MetaStock over the years. I think it can be helpful for you. I want you to try it. And so I want to keep the risk low and the reward high. If it's not worthwhile for you, we'll give you a refund. So take advantage of it. Give us a call, 800-882-3040. You can also visit us at metastock.com/sales chat. If you just want to get started with Veracity, or I'm sorry, with Victory, we'll give you that $9.95 offer. Or you can do the Signature Collection as well, which will include all 4 of the add-ons that we've developed over the years with Vince Vora. So with that being said, I want to say thank you for coming. Thanks for being here. If there's anything we can do to help you, please let us know. Stay healthy, stay well, and I hope we see you at the next one. Thanks, Vince. Thanks, everyone. We'll see you next time.